mortgage fees and points explained. That's what we're covering in today's video. Should you pay points? Should you not? What the heck are all these fees? What do they mean? Do you have to pay them? Can you negotiate them? Lots of good stuff in today's video, so please be sure to stay tuned till the end because I always add value-packed information in a short period of time. My name is Stephanie Weeks, and I've been helping people with their financing for 18 years, and I would love to help you. WeeksTeam.com or 985-300-LOAN. We can help in multiple states, so please do reach out. All right, so there's a lot to cover today, and I'm going to try to keep you entertained and not make it too boring. So the first thing we're going to do is we're going to talk about what are mortgage origination fees. I'm going to read you by the book, and then I'm going to go through the layman's terms and the real life. As a first-time home buyer, you know what, or a second-time home buyer, because there's so many times that people have financed houses before they came to me, and I'm like, you did this last time, you paid this last time. No, I didn't. Give me your paperwork. They just didn't explain it to you. Oh yeah, you're right, I did pay it. So, and I don't want that to happen to anybody. I want you all to know, understand everything that's going on, what you're paying, and why you're paying it. So as a buyer, shall I say, there are many mortgage terms that sound foreign, that is for sure. For example, when you start looking at interest rates offered by lenders, they will often be accompanied by points or origination fees. So what are these extra fees, and do you have to pay them? What's important, points and origination fees are very, very different. They're two different things. So the points are fees that you pay to buy down the interest rate or get a lower interest rate than if you choose not to pay the points or the fees. Since it's a prepaid charge that does affect your APR, a prepaid finance charge, it is something that is tax deductible if you pay points to buy down the interest rate. Now, origination fees are fees that are charged by lenders and or banks to help them cover their expenses and or profit on a loan. It's not directly correlated to the interest rate that you're getting, and it's not always tax deductible. So that's super important to know those differences. Now, mortgage origination fees defined. These are lenders' costs for creating and or processing or originating the mortgage loan in addition to the closing cost and prepaids. Well, I don't like the word in addition because it falls under closing cost. It's not a prepaid, it's an origination, which falls under a closing cost. So these fees are one of several ways that lenders make their money and or offset their expenses to cover things like document prep fees, processing fees, underwriting fees, tax service fees, courier fees, different things like that. Probably wondering, how much do these origination fees cost? Well, let me read you by the book and we'll talk about real life. Origination fees vary from lender to lender. You can expect to pay anywhere from 0.5% to 1% of the loan amount. I've definitely seen more than 1%. So say you're taking out a mortgage of $300,000 and the lender charges 1% origination. That would be $3,000 as part of your closing cost. In many cases, you can buy down the interest rate, like I said, with points, and that's going to be separate from your origination fees. When are points paid? Let's say that you do decide to buy down the interest rate. Let's say, when are you going to pay the points? They are due at closing, just like origination fees, just like closing costs. They are due at closing when you go to the closing of the loan and or the purchase of the home. You are going to be provided a few days in advance with those final numbers. Please don't show up with bags of money to the closing. You're going to have to bring a certified or cashier's check made payable to the title company. Do you have to pay origination fees? In one way or another, the answer is yes. There's a lot of expenses that goes into giving everyone a home loan. Hopefully everyone, wouldn't that be nice if everybody could get it? But to giving people a home loan. And so those costs have to be recouped by the lender. And in addition to that, the lender also has to make money or there won't be a lender because they would definitely be going out of business. So can you negotiate origination fees? Yes, sometimes. It's always worth asking the question. Can you negotiate the points? Yes, sometimes it's always worth asking the question. Now, as you begin the home buying process, or again, maybe it's your second time, you want to make sure that you do understand what you're getting, why you're getting it, and what that difference is, and actually if it's worth it. So I do have another video called Mortgage Points Explained, when and how to buy down your mortgage. I have another video, is buying down points worth it? What are mortgage points? So those are some other videos. I'll drop links where you can check out. Let's talk about a specific example with points, because I want you to see some actual numbers, and we'll see if it's going to make any sense. I'm not quoting an interest rate. I am going to literally make up things from my brain right now just to have numbers to show you, to see if something would make sense. So we're going to go back with that average loan amount of $275,000 loan. And let's say that you can get a 30-year interest rate, I'm not quoting a rate, at 5.125%, okay? And let's say that that was no points. Let's say that you could get 4.75% interest, I'm not quoting a rate, and it cost you 1 point. 1 point is a percent, so it's 1% of your loan amount. So 1% is gonna cost you $27.50. So at closing, you have your down payment, if any, your points, your closing cost, and your prepaid items. You have all these things that'll be due at closing. So let's say $275,000, 30-year loan, 5.125% interest. That payment before escrows is $1,497. And over the 30 years, that $275,000 loan amount will cost you $539,042. We're going to compare that to an interest rate of 4.75%, which gives me a payment of $1,434. And over the life of the loan, that $275 is going to cost $516,430. Does it make sense? Here's how you find out. We're going to take my $1,497 from 5.125, subtract $1,434, which is my payment before escrows, at my 4.75. That's a savings of $63 a month. What did it cost me? Remember, it cost me an extra $2,750. $2,750 divided by 63 is a 44-month break even. Take it one step further. If I'm keeping the loan for 30 years, $539,042 at 5.125 minus $516,430 at my 4.75, that's a difference of $22,612. Okay, so I'm looking long term, and I'm not going to pay this house off early, and I'm not going to sell the house. This is my house, and I'm sticking with it for 30 years and 360 payments. Well, if I can pay $2,750 today to basically make over $22,000, is that a good return on your investment? I would think so. Again, this is over 30 years. So if it's a long-term investment, maybe if it's even 20 years, then it might very well make sense to buy the points to get the lower rate. Now, over the years I've been doing this, the average person stayed in their home around 7 years. Recent stats I saw a few weeks ago was that people are now in their homes for 5 years. Let's use that scenario. Let's say that you stay in your home an average of 5 years. Do you want to pay $2,750 today to take 44 months to save 60 minus 44 times my $60 savings? Do I want to pay $2,750 today to take 5 years to save $1,000? I'm going to think that we're all going to say no, right? So it depends on your situation. There's a lot of other ways I could run this for you as well, but those are just some of the basics. And that's what's really important. So a lot of times people don't even realize they're buying points. Please ask questions. I don't want you to get what you're not expecting. And right now, because of the huge increase in rates, the majority of these big online lenders that I'm seeing quotes come across my desk, they're charging 2 points on average. 2. So if you're one of the few people who are going to live in your house almost forever, fine. It might make sense. But if you're the average one of us that's in there for 5 years, you are throwing money away and you might not even know it, and they might not even be explaining it to you. So that's points in a nutshell, origination versus discount. I hope this makes sense. Please drop me comments. I would love to hear from you. This is coming up a lot more now with the big rise in rates. We're seeing more adjustable rates, which I talked about in another video, and we're seeing a lot more points being quoted just to make the rate look better for comparison's sake. And there's a lot of time, I'd probably say 80% of the time, where that's an actual bad financial decision for that borrower to be paying that. So thanks for stopping in, and I hope to see you in the next one. Thank you so much for tuning in. You can reach us at weeksteam.com or 985-300-LOAN if you want to refer us to anyone else that needs help with any type of mortgage financing.